Hi there, this is Charles Kelly, Money Tips, author of Yes, Money Can Buy You Happiness, and the producer of this Money Tips podcast. I've produced something like 300 episodes, which all go out to you free on various channels. So if you're watching this on YouTube, Facebook, Instagram, whatever, TikTok, please like and share. And please like it and comment if you like. I'm also on iTunes, Stitcher, and many other podcast platforms, Anchor as well. So please like and share to get this content out to as many people as possible. Now, stock markets have fallen around the world, wiping billions off the value of shares on the discovery of a new COVID variant in South Africa, which, correct me if I'm wrong, I think, as I heard on the news last night, had infected about 50 people. But the whole world seems to have gone into a shutdown, and the London stock market's dropped by nearly 3%. It doesn't sound a lot, but that is billions of pounds worth of shares, the value of shares. Germany, France, all over Asia is now falling, and shares in travel firms have been hit the hardest. BA's parent company has fallen by 14%. 14%, that's a huge amount. Rolls-Royce, the engine maker, by over 10%. Intercontinental Hotels by 7%. So it's a major sort of disaster, really. And nations have now started to ban people travelling from those countries. A lot of British people who are in South Africa now will be affected, and Southern Africa. Now, other news is that there's a 40-year fixed rate mortgage launched in the UK. Kensington Mortgages have launched a rate that you can fix for up to 40 years. Would that suit you? Would you like a 40-year fixed rate mortgage? I think it would depend on the redemption penalties and what it costs to get out of the mortgage, because most people tend to move every 7 to 10 years, maybe even less now. But in other countries, I know in America and many other countries, a sort of a 25 or 30-year fixed rate mortgage is the norm. Whereas here, people are given mortgages on discounts, on short-term fixed rates, and with large fees, and then they have to keep renewing them and pay more large fees every time they renew the rate. So I think here, some borrowers are getting a bit of a raw deal. They're getting the short end of the stick. And also here, lenders will not transfer a mortgage. So if you sell a property that has a small mortgage on it, in America, you can sell the property with the mortgage on there. No, here you have to redeem the mortgage. Then the person has to apply for another mortgage and pay more of those large fees to get the mortgage, because the lenders are not happy with earning the money on the interest rate. So they're getting the money, they're borrowing the money from you or I at almost zero they're paying, but they can lend it out at 3 and 4%, which is many times the base rate. They're not happy with earning profits on that. They also want to charge you a fee to get the mortgage. So here's the mortgage, we're going to make money out of you, and we're going to charge you a nice fee for the privilege because we're fixing your rate. Whoa. And then they charge you a fee to get out of it. They charge you a redemption penalty if you redeem early. They charge you a redemption penalty at the end of the mortgage just to give you your deeds back, which is the digital deed now anyway. So there's charges all the way along. So just be wary of that. I'm not knocking it. You have to have a mortgage to buy a property. It's very difficult to save to buy a property because you'd never save enough money while the property's going up if you had to buy it cash. And first-time buyers now in cities like London, St Albans, where the average property is now 14 times average salary, and people are having to borrow maybe 4 and 5 times their incomes just to get on the property ladder if you're a first-time buyer. So it's very difficult. And I know that interest rates are low, and that means that people can borrow a lot of money now. Certainly, frightening amounts of money for a first-time buyer, maybe £500,000. But if rates go up, then a lot of people will be hit. And I think rates will go up, certainly if not this year, but in the new year with inflation soaring. Now, things can change. The economy could turn. Inflation might start slowing down even. But I don't know. Food prices are on the rise. This is according to one of the biggest fertiliser producers called Yara International, YARA. The chief executive is saying that higher gas prices are pushing up fertiliser costs. Oil and it goes into these fertilizers. Lots of propane goes into fertilizer, and now there's a global shortage of fertilizer, and you need this fertilizer to grow the crops, and that will leave poorer countries facing a crisis, but also countries in the West paying higher food prices. So watch out for that. That will affect inflation. People are already paying higher amounts of money now, higher bills, higher energy bills this winter. That's all going to affect inflation, and that's why I think rates could go up. Countries like South Korea, quite a few others have already put up interest rates to curb inflation, and yet inflation in South Korea is only at a couple of percent, whereas here we're already into 4%. America's already into 5% inflation, and that's a serious hit on your savings. It will affect the value of your savings over the coming years if you don't invest your money properly. Now, I'm not saying take your money out of the bank and put it into the stock market. I wouldn't do that at the moment. Look, the stock market is already falling. I don't think this will lead to a crash, but it does show you the weakness of the economy, where stocks are way overpriced at the moment. The PE ratios, price to earnings ratios, are almost at historically high levels. Stocks are way overpriced and we're due for a correction. Could this be the trigger? I don't know. Probably not, but let's see what happens. Now, the UK car industry has suffered its worst October, and October tends to be a good month for the car industry in the UK for various reasons. Worst October for 65 years. Car production dropped by 40% due to a worldwide shortage of semiconductor things, chips that go into cars that tell you, when your oil needs changing or where you're going and that sort of stuff. There's loads of chips in cars. Don't ask me to explain it, but that's causing car production problems, and that means the production slowing, jobs slow down, overtime, pay, layoffs, all that sort of stuff. Now, other news this week is that net migration, that is the net figure from people who leave the country to people coming in, fell by 88%, but asylum claims have reached a 20-year high. But net migration has really slowed down, according to the Office for National Statistics, ONS. This showed that the difference between immigration and emigration fell by 80% in 2020, since that's going on to 2019 figures. It's the lowest level since 1993, in the heydays of the Labour Party, when they opened the doors wide open to say, come into the country and hopefully you'll vote Labour. And that's maybe a bit cynical there. But anyway, net migration to the UK was only 34,000 in 2020. This follows David Cameron's target from about 10 years ago, who said we would bring immigration down to the net migration down to the tens of thousands, but he never managed to do it. But Brexit, of course, and the COVID situation has meant that my immigration has fallen, literally fallen through the floor. The number of immigrants coming into the country, still at 268,000, by the way, but compared to in 2019, it was nearly 600,000. Now, we know this week also that 27 migrants died in the Channel, just off the coast of France, which is tragic. These are the people that are trying to get over on boats and dinghies. Well, these people went over on some cheap Chinese dinghy that didn't even make it out of the harbour of Calais, or off the beaches of Calais, and it sunk. And unfortunately, 27 people died. But asylum claims are soaring, and there's something like 1,000 people coming in a day still, into Dover, and been shepherded in by the UK Border Force, and even by volunteers and the Royal National Lifeboats, bringing people in who are stranded apparently in the Channel, and have a mobile phone, say, call us, please help us, and get those hotels ready and all that sort of stuff. Well, that's still happening. Now, other news on cryptocurrency is that India is following China's move in trying to ban cryptocurrencies. This follows China, as I said, banning all cryptocurrencies, and the ban will relate to all private cryptos, with certain exceptions to allow the promotion of underlying technology in its uses. But cryptocurrency prices dropped. Now, when you watch this, maybe it's gone up again, but that's the situation then. Like, you could watch this next week and then stock market may have recovered by then. But a lot of people say you can't control cryptos, governments can't control them. But we know that governments want to bring in their own central bank digital currencies, which then will control everything we spend, everything we do with our money. But at the moment, they're trying to sort of get rid of the unregulated cryptos and say, no, we don't want those, but we want our own form of crypto digital currencies. So we will have to see what happens there as other countries move for their own currencies, and see how they will ban those other currencies. Now, you can also see my articles on YouTube. Please subscribe to my YouTube channel. There's other articles there, 9 habits to develop extreme productivity, which is not as difficult as it sounds. Buy-to-let demand, according to an agent I spoke to about a month ago, said it had fallen in London by 60%, and Chinese buyers have sort of dried up slightly. We're going into winter, so the market has slowed. Prices have dropped slightly in the last month of properties, but that's normal for the winter periods. But it does look like, buy-to-let landlords have really been hit by government legislation over the past couple of years in the UK. And, there's more red tape, more stuff to spend on, electrical reports, this report, that report. It all takes away the profits of buy-to-lets. But the government need buy-to-let landlords because there's not enough properties being built. So the long-term demand for properties should continue to go high because they're not building enough properties to cope with the amount of people. Like, look at that, 250,000 people came into the country in a year. So they need to live somewhere. And the birth rate and all that sort of stuff, people living longer. We still need properties in the future. So, but property prices can dip. They can still go down as well as up. It doesn't always automatically keep going up and up and up. And they have been going up quite a bit since 2009-10, after the last global financial crisis. And if there is a stock market crash, if there is a huge stock market correction, then properties could follow from that. Maybe in a year after a stock market crash. Stock markets can just go down like that. Property prices don't tend to sort of drop just like that. It takes time because the transaction time is much longer with properties. Now, if you want to know more about properties, then you can discover how really thousands of British people are quietly making a fortune. They're quietly getting rich, but not using any of their own money. Many of them haven't got any money to use anyway. Now, what I want to tell you about is a no money down discovery day that you can join in online next week, and the trainers there will tell you how to buy property using none of your own money, to use proven methods to get into the property market without having to use your own cash, or if you haven't got any money to get into property. So you'll find how you're going to discover about the no money down matrix, a system of proven investment strategies to secure your place in the property world using none of your own cash. Step-by-step guides, how to cash in on the next big property strategy, all sorts of stuff there. Learn how to do successful joint ventures. Learn how to trade in properties without even buying them. There's loads of stuff you can learn from that. It's absolutely free. Click on the link below and I will tell you how you can get into property using none of your own money. Get onto that. You've got nothing to lose and everything to gain. And wherever you are, have a great day and stay safe out there. Thanks very much.